This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on August the 6th, 2015. Our time is 8:48 Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, telephone number 1-800-432-1022. Financially and geopolitically, the world is a very confusing place. If you have any questions, as Harold has talked about on past shows, connect with him. He'll be happy to talk to you about your financial situation. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com is a .29 carat paracut fancy orange diamond. Absolutely stunning. We'll talk about a record-breaking orange diamond a little later in the show in the second half. Now, as we kick off the info for the week, it has been a very busy week, even though here in Canada we had Monday off, Holiday Monday. Canadian dollar continues to go down, as Harold predicted. Also in the United States, will they raise rates? Won't they? The Fed, two governors coming out and saying, one, yes. Lockhart saying yes in September. Powell saying maybe. In England, the Bank of England, by a vote of 8-1, left rates at 0.5 point. As predicted, Puerto Rico defaulted on bonds on Monday. They owe $72 billion. They can't pay it. It's that simple. They defaulted for the first time. This will start the process of, I guess we'll see where things go. And if they do get bailed out or rescued, or there's some sort of package that's put together by the creditors. A research group came out and said this week Greece needs way much more money than the IMF is predicting. In fact, they need $100 million to turn their country around. And here we go again, lending them much more money that they really can never pay back. Also, the Greek stock market opened and heavy selling. In fact, in the first couple of days, the stock market was down well over 50%. Bank stocks just absolutely got decimated. In Switzerland, the central bank there, we know the central bank removed the Swiss 120 to the euro peg, and they've been defending their currency since. The central bank in the first 6 months of the year lost $51 billion. And I know that Egon von Greyers, an expert from Switzerland and an advocate for hard assets, said this would happen, and he was ridiculed in a debate when they talked about backing the currency with gold, which ultimately lost. But he said this would happen. They would lose a lot of money, and they've lost $51 billion. The Chinese stock market continues to dive. The authorities there trying to do whatever they can to stop the fall. In fact, they're going after short sellers and high-frequency traders. Nothing seems to be working. The oil crash has cost a loss of net worth of $1.3 trillion. And there was a story on the Drudge Report today that the Saudi kingdom is going to have to borrow around $72 billion. So here we are. We had a report last week in our newsletter that they're costing themselves, by keeping oil low, $200 billion. They have a huge amount of money they need to spend on social programs in the Saudi kingdom. And because oil prices are low, they're going to run out of money before they break every other country that they're trying to compete with for oil. And development of oil, and obviously keeping the oil price down, kills the shale and even our Canadian oil sands. And on the commodity front, Harold, it was another tough week on the commodity front, as we have in our free weekly newsletter numbers for July, the beginning of August. And as you predicted, we saw gold go down a bit. It seems to have stabilized around about $1,080 to $1,100. And at this point in time, Harold, we're seeing that gold is hanging in there. Will it break down to that $1,000 level? I would suspect it has a very good chance if they raise interest rates in the United States. More than likely, we could see it pull back. And then at that point, I know that you believe that we could step in potentially to look at investing in gold for the long term again.
Well, I certainly do. But again, the the pullback is certainly not over because, again, the U.S. dollar is continuing to strengthen. So you've got a strong U.S. dollar, which has the adverse reaction to gold. So gold is going to drop as the U.S. dollar continues to rally. It's not that things are amazing in the United States, but they're a lot better in the U.S. than it is anywhere else in the world at this point. That's why the U.S. dollar is so strong. As we're taping the show, gold's trading at 1,091. It was down as low as 1,083. Now, there is minor support at 1,080. We'll definitely break 1,080, probably break it next week. The next major level for support in gold is 1,050, minor support at 1,025, and then obviously major support at 1,000. The biggest support for gold is at 850 because that was a high that we saw back in 1979-80. So again, we predicted that gold would make its rally from 250 up to 1,900, which it did. And now we're looking that gold is dropping because the opposite is happening. The U.S. dollar is extremely strong, and that pushes the price of gold substantially lower. Now, the interesting thing is that back in the 90s, when the U.S. dollar was at 106, 108, it was actually pretty well the strongest currency in the world except for the British pound. Gold was at 250. So now we're approaching par on gold. Par is obviously at $1. Right now we're trading at 98 cents and change. So, we definitely predicted that not only will we break par, but when it gets to par, there are buy orders in the futures market just above the par level, which will push the U.S. dollar substantially higher. So we are predicting that the U.S. dollar is going to go back to the all-time highs of about 108, 109. That's going to push the Canadian dollar down to about 60 cents. So be prepared for that. If you're planning to travel to the U.S. or to Europe or anywhere, you're going to notice it. Right now, it would cost you about $1,300 Canadian to buy $1,000 American. And soon it's going to be more than that. And the reason for that is that the Canadian dollar is based primarily on oil and other commodities, and because Canada is a commodity-based country. So as commodities continue to fall in unison all over, that's going to push the Canadian dollar lower. On top of that, if they do decide to try to raise interest rates here in the U.S. in September, even if they do it by 1/4 or 0.5% would be a lot. We'll have to see how the markets react to it, but that would definitely strengthen the U.S. dollar further. So what we've been saying is make sure that your investments at this particular point, if you're interested in making money, are in U.S. denominated investments. Those that are sitting in other currencies, again, for example, the Canadian dollar, you're going to find that as soon as you travel or buy anything that's imported or whatever, it becomes very, very expensive. And then inflation starts to kick in. Because of the drought in the Canadian plains, there's a massive problem in the cattle industry. So the fact is that Canada exports a lot of their cattle, to the United States. The fact is that the price of beef is skyrocketing. So is other products. So the fact is that they're strengthening the dollar, in my opinion, to compensate for what's coming in inflation. Now, the reason that we've always said from the beginning of time when we first started recommending gold was the reason that we wanted to own it was eventually there was going to be massive inflation. So we've had to go through a myriad of different situations over the last 15 years. We've seen the market rally in gold and silver, and we've seen fortunes made. We saw the oil market rally up to $150. We saw the euro go from 87 cents all the way up to $1.40, $1.50. We've seen some amazing markets, and now we're starting to see the retreat of these markets. You've got to know when to buy and to sell, and for more aggressive traders, when to go long and when to go short. A lot of clients have been taking our advice on the currency markets and have made a fortune in it, and will continue to do so. There's absolutely no doubt at all that the U.S. dollar is going to break par and go to 105 to 108 to 109. That's going to push the Canadian dollar down to around 60 cents. It's also going to push gold down to around 1,000. In actual fact, if gold breaks 1,000, it would not be unusual with this last sell-off, in the or the strength of the U.S. dollar, that we could see gold actually break 1,000 and go into the 900 range. In that level, you're never going to call the exact bottom or exact top of a market, but once it gets to the point where the U.S. dollar is going to basically top out, which will be at around the 105, 107, 108 level, then we know what to do from there. We'll be very aggressive buyers of gold, especially if they're raising interest rates to fight inflation. Now, when we say inflation, let me give you the best example I can do. Right now, there are several countries in the world that are dealing with hyperinflation. And it's because of the currency markets, and it's because of the, sanctions that were brought against them. I'm talking countries like Russia, Venezuela, Iran, countries like that. Let's look at Venezuela. Venezuela was doing well. It's a country that's very rich in oil sales, and here's a country that got into trouble with the United States and other countries because of the way that their leaders were acting. On top of that, the price of oil dropped from 150 down to 30 some odd dollars, and because of sanctions and everything else, do you realize that it costs $200 for a loaf of bread in Venezuela? That if you wanted to buy an iPhone and you lived in Venezuela, it cost you close to $50,000? As opposed to the $200 or $300 it costs here in North America. That's what I'm talking about, inflation. That's how quickly your economy can change. And that can happen anywhere, and it's going to happen. There's no doubt that we are going to see the repercussions of all the money that's being printed and borrowed and everything within the United States. But for the time being, the United States is the best game in town. Their currency is the strongest. The economy here is the best. China is plummeting, their stock market, their credibility, everything about them. And I predicted that last year on Fox News, and I was, in a way, not ridiculed, but Deidre Bolton looked at me and said, "Are you crazy? That's never going to happen." And look what's happening right now. I've been very fortunate in my career, in the 35 years that I've been in the commodity business and in the hard asset and alternative asset business, to be able to decipher which way markets are going to go. It's just been something that I've been blessed with, and I've been very successful at it. Again, I've been very conservative. I'm not one to leverage, take unnecessary risks, or take risks with my clients' money. So, my clients that have followed my advice have done extremely well, except those that decided to get a little bit more aggressive and leverage their positions, and they paid for that. You don't leverage your gold and silver positions when you're buying it as a hedge against inflation and everything bad that's starting to happen right now. If you had bought gold at $250, it's still at $1,000. It's still up 400% with all of the things that they've tried to do it. As much as they've tried to beat down gold and everything, but those days are going to turn around, and I'm going to tell you the major catalyst that is going to turn around gold and silver. It's going to be that gold and silver are below production cost levels now and going to get worse. The mines are all going to close, and the fact is that the price of gold and silver, when nobody expects it, is going to take off and run again, just like it did in 2000 when we first recommended it, and everybody laughed at the recommendation in gold and silver. They may think that it's extremely negative now, which it is, but this is one of the best times to buy. When nobody's looking at it, when it's not on the radar, when every indication is that it's not going to run, it's a forgotten product, it's going to run like crazy because the open interest in the market is going to change, and the short positions in the market, they're going to have to buy it back again. I've traded these markets for 35 years. I've given everybody great advice over these last 15, 16 years. Believe me, what's coming up is going to make us an awful lot of money. When everybody else is going the wrong way, we're going to make a fortune in the metals again, and we did it over the last 15 years. I'm very excited about what's happening in the market. Every day I wake up, I can't wait to get to work because it's going to be another opportunity. The Dow Jones should be plummeting at this point here. It's been down almost every day. It's down to 7,400, and I say it should be plummeting because of what's happening in China. Their market is a joke. It's fixed. It's manipulated. It makes no sense whatsoever to trade in a market like that, and the U.S. stock market is not that different, believe me. There's going to be opportunities coming up in metals, in currencies, in oil, in all other markets. And by the way, Saudi Arabia is purposely dropping the price of oil so everybody else will be out of the oil market. They can borrow whatever they need to borrow, but they are going to get the job done. They can drop the price of oil down to $25, and everybody else will be squeezed out of the market. That's another reason why the Canadian dollar is falling. It's priced in oil. So, again, Randy, at this point, with Greece and Europe and China and everything going on, there's a lot of volatility and a lot of fear in the market and a lot of uncertainty. I think we've got a pretty good, clear idea of what's happening. And again, we're sticking to our play at this point. We're long the U.S. dollar, we're short the Canadian dollar, we're short oil, and we're short gold. And those are all trades that are making my clients fortunes at this particular time. If you're not making money in the market, if you're not making anything and you don't know what to do, pick up the phone and give me a call. I've had over 40 phone calls this week from listeners to the radio show, some clients, some brand new, that are concerned, all from Canada. And again, I'll spend as much time with you as you need to try to iron out what you're doing and get you on the right path. One wrong move could set you into a terrible financial situation. We're very conservative. We don't take unnecessary risks. Some of our Canadian clients are making 24% a year U.S. dollars with my company. All my clients that bought diamonds 2 years ago when the Canadian dollar was at par with the U.S. dollar are up 30%, soon 40% just on the currency. If you're not making that kind of money, you need to contact me right away, and I'll sit down with you and talk to you and help you and try to push you in the right direction.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Telephone number 1-800-432-1022. And I stress this when I've mentioned it in the past and present. Your conversation with Harold is 100% private. And keep that in mind. It will be a private, personal conversation with Harold. 1-800-432-1022. Connect with Harold at rarecoloreddiamonds.com. We have a newsletter that's packed full of information. You can go through it in 5 minutes, or you can really spend hours if you want. Don't forget, if you ever miss a radio show, the shows are archived on Harold's 2 websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on radio. You'll find us there. Our show is portable. We go anywhere you do. Harold was talking about the U.S. dollar, and before we get to a very important story here from our newsletter, we have from our chart of the week in our newsletter, King Dollar has cost S&P 500 companies $244 billion. The strong dollar is one of the biggest stories in the global financial markets, around 98 cents. The U.S. dollar index is up over 19% from a year ago. Well, that's good news for importers. It's bad news for exporters. And it's going to cost multinational companies who do a lot of business overseas. They're projecting $244 billion in aggregate. One of the reasons that we recommend investing in hard assets, diamonds, gold, and silver, is to maintain your wealth. And in paper assets like currencies, you are slowly but surely being debased over time. In fact, to give you an idea, in 1979, and this is a hypothesis from Keith Weiner, Clarence's $100,000 savings earned enough to support his middle-class lifestyle. In 2014, Larry's $1 million didn't earn enough to pay his phone bill. To live in the middle class, Larry would need over $100 million. That's a pitiful income to make on such a massive pile of cash. It reveals hyperinflation in the price of capital, which has gone up 1,100 times in 35 years. It also shows that the productivity of capital is collapsing. Back in Clarence's day, businesses earned a high return on capital. It was high enough for Clarence to get to 11% interest on a short-term GIC, or a term deposit. Unfortunately, the dollar rot is in the advanced stages now. There is scant interest to be earned. Return on capital is low, so borrowers can't pay much. Retirees suffer first because they can't earn wages. Normally, they would depend on interest, but now they're forced to live like the prodigal son. They consume their wealth, leaving nothing for the generation that's behind them. And they go on to say that some people obviously could outlive their money. Zero interest rates has reversed the tradition of centuries of capital accumulation. Purchasing power may look fine, but yield purchasing power shows the true picture of the monetary collapse, and that from Keith Weiner. And I think that's a very important point to make at this time, and that is we're in an era of financial repression. We have, obviously, if you're the big banks or Wall Street, you're profiting very nicely. If you're a senior citizen, as we've talked about before, or somebody who's living on fixed income, you are absolutely getting decimated through phony inflation numbers, and then on top of it, you can't get a very good rate of return if you're investing in GICs or a term deposit. You're being forced to take a lot more risk than you really want to as a result of what's happening in the world financially today. It really is what is called financial repression, and it's something that should be noted. John Embry from Sprout Asset Management really summarized things this week, I think, in a great way. The powers that be are trapped in the world of falling economics and economies, massive amounts of unserviceable debt, even at zero-based interest rates and paper currencies, which are kept afloat by what little confidence remains in them. U.S. authorities will do virtually anything, and I would not rule out war to keep confidence in the U.S. dollar. The minute that confidence is lost, and it most assuredly will be in the not-too-distant future, the implications for the United States are dire. The middle class is already being destroyed, and the lower classes are being kept in line by entitlements that are ultimately unsustainable. When the dollar collapses, living standards in the United States are going down with it, and the social ramifications are frightening. Thus, the authorities in the United States are doing everything to prevent the inevitable. They are misrepresenting the true condition of the economy. It is much weaker than they are acknowledging, and recent retail numbers confirm that. The Fed is buying an inordinate amount of Treasury bonds to hold interest rates at bay, while at the same time holding out prospects for an administered rate hike to keep confidence in the dollar. That from John Embry of Sprout Asset Management. But Harold, we are in times now where we need an experienced hand at the wheel, and that's where you come in. I know that we have about a minute left here in our segment. Anyone who would like to speak with you personally and privately about their financial situation and start making some money in these very confusing markets should call you at 1-800-432-1022. You'll be more than happy to speak with them.
Certainly would, Randy. Again, at this particular point, it is so confusing for most. And again, it's not that my clients are the Warren Buffetts. They're not. They're the hardworking, everyday people that just need the right information so they can do something constructive that's going to help them and their families. So, again, at this particular point, Randy, I'm available to speak to any of our listeners. There's no pressure whatsoever. There's not a sales presentation in any way. All I want to make certain is that we're all on the right track, because when things do turn, again, there's going to be a lot of money made, and I just want to make sure listeners to our show, and I speak to a lot of people. A lot of people have listened to our show for 10 or 15 years now, so they're regular listeners that listen every single week, and we want to make certain that we do right by them.
Speak with Harold personally and privately, 1-800-432-1022. Find out how financial assets can be your life preserver in the confusing financial markets and geopolitical markets that we have today. RareColoredDiamonds.com. Call Harold at 1-800-432-1022. Our featured diamond of the week is a .29 carat pear-cut fancy orange diamond. Absolutely stunning. We'll talk about a world record price for an orange diamond. Talk about diamonds in detail. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August the 6th, 2015. Our time is 9:12 Mountain. Our radio show runs on 6:30 CHED in Edmonton, 3 o'clock in the afternoon on Sunday. If you ever miss a radio show, they are streaming live, archived on Harold's 2 websites. We're always there for you, anytime, 24/7, 365, and HESradio.com and RareColoredDiamonds.com, 2 go-to websites for our radio show. We also have a podcast through iTunes. If you have a portable device, we fit on your portable device and can go anywhere you do, and you can listen to us at your leisure. All you need to do is type in the World Financial Report on Radio in iTunes, and you will find our podcast there. You can subscribe to it. Our featured diamond of the week, and you can connect with Harold at RareColoredDiamonds.com or call 1-800-432-1022 to find out more. It's a .29 carat pear-cut fancy orange diamond, and the pear-cut is absolutely gorgeous. Find it on the website RareColoredDiamonds.com, featured diamond of the week. You can see video of the diamond there. If you get our free weekly newsletter, we have a picture of the diamond in the newsletter with a link to the website. It was at the end of 2013, beginning of 2014, about a year ago, there was a 14.82 carat orange diamond that sold for a record $35.5 million. The largest fancy vivid orange diamond to ever appear at auction, shattered a world record as it was sold for close to $36 million at Christie's Geneva Magnificent Jewel Sale. And it was just an absolutely stunning diamond. And we wanted to put that story in our free weekly newsletter so people could take a look at the featured diamond and take a look at this world record diamond. And Harold, both are museum pieces, both obviously outstanding investments. And when we're talking about orange diamonds, as you've spoken about before, we're talking about the rarest of the rare. In fact, rarecoloreddiamonds.com and your other company, Diamante Atelier, actually had an orange diamond that was sold earlier this year. And it was a .66 Marquis Fancy Intense orange diamond. You've spoken about that diamond before on the show, but when we get into the orange diamonds, these, when you have a strong color as this one is, these are museum pieces and just absolutely stunning.
You better believe it, Randy. Again, most people, first of all, don't know that a diamond could ever come in orange as far as the color goes. Purple, orange, red, green, blue. They turn these colors due to minerals within the ground. So what turns a diamond yellow or ultimately orange is nitrogen. So nitrogen has to enter the ground in order for a white diamond to basically turn either yellow or orange. Now, there's a lot of yellow diamonds available. Very seldom will you ever see an orange diamond. The one that we're offering this week is extremely rare because orange diamonds in general are amongst the rarest diamonds in the world. The diamond that Randy was referring to, the one that sold at auction last year, actually sold for pretty well the highest price per carat ever sold for a diamond. It sold for over $2 million a carat. So, again, you're talking something that is ridiculously rare. The one that we're offering is obviously a smaller diamond, but the color is absolutely outstanding. It's a magnificent diamond. It's a collector's piece, and it's a diamond that will increase in value more so than almost any investment that you would make. See, the thing about a diamond like an orange diamond, the fact that most people have never seen one obviously makes it extremely rare. But the fact is that there's so few of them available that the prices of these diamonds just go up and up and up and up. And the other exciting thing about it is, as I mentioned at the beginning of the show, you want to make certain that you have investments that are based in U.S. dollars, and diamonds are based in U.S. dollars. And that's an amazing thing. Let me give you a perfect example of how the currency markets are so important in your investments if you want to make money. Now, a couple of years ago, when the U.S. dollar and the Canadian dollar were basically at par with each other, many of our clients invested in diamonds. Yellow flawless diamonds, argyle pink diamonds, blue diamonds, green diamonds. These diamonds are so rare, they never ever decline in value, and they have a track record. Yellow diamonds, for example, increase by 15% a year. Pink diamonds are going to continue to skyrocket because there's not going to be any more of them. The mine is going to close in less than 5 years. So the thing is that our clients in Canada that bought diamonds 2 years ago when the Canadian and the American dollar were at par are up 30% on their investment just on the currency alone, because the Canadian dollar, or I should say the American dollar, strengthened by 30%. Diamonds are priced in U.S. dollars. So all of my clients, by the way, congratulations, that bought diamonds when the Canadian dollar was even or even stronger than the U.S., are up 30% or more on that diamond just on the currency alone, let alone the fact that, for example, a diamond like this orange can go up by 20-25% a year. Our clients have possibly in the last 2 to 3 years come close to double their money if you owned a very rare orange or purple or red or blue or pink diamond type of thing. So, and this is going to continue. The worse that the stock markets get, the worst thing that's happening in China right now, believe it or not, is their stock market. As bad as their real estate market is with all these ghost cities and everything that have been built, their stock market is a disaster because it never should have gone up as much as it did. Very similar to the U.S. market, it didn't reflect the actual Chinese economy. And then when everybody realized that the Chinese market was overinflated and again manipulated, the market plummeted in 30% in 2 weeks. 30% in 2 weeks, wiped out most of the investors. Then the Chinese government came in and halted trading, which is illegal. Then on top of that, they bought back the market for billions and billions and billions of dollars, hundreds of billions. And then as soon as they did that, the market plummeted again. So you've got, again, so much volatility and risk in the world today. Those who thought that China was the next place to make big money just learned a very valuable lesson. The same lesson they're going to learn very soon in the stock markets here in the United States. There's no way in the world that the Dow, even at 17,500 that it's at today, reflects the overall U.S. economy. The U.S. economy is weak at this point, but it's stronger than most other economies. So now we've got U.S.-based investments that are based in U.S. dollars. Now, you may say at this particular point, well, 2 years ago I could have bought a diamond at par with the Canadian American dollar. Now I have to pay 30% more. That's very true, but you're getting your money into a much stronger currency, a currency that is going to be the strongest currency of all. So primarily, even a diamond at this particular point, even though you may pay 30% more because of the currency, don't forget you get that money back when you sell the diamond. On top of, we anticipate that the U.S. dollar is going to increase by at least another 10 or 15 cents, 10 or 15%. So again, at this point here, as I've said, substantially for the last few weeks, is to make sure that you get some of your investments in U.S.-based assets, whether it's buying American dollars, whether it's investing in our rough diamond program that pays 24% a year U.S. Our clients have made a fortune on that, or if it means buying a diamond and having your money in U.S. dollars. Because, again, you're buying assets that you're not going to lose your money in. You're not going to lose money on an orange diamond. There's a handful of them in the entire world. There's no chance of that happening. So what we are also going to say at this particular point, I have hedged the Canadian U.S. dollar. I've done it many, many times in my career, especially when I have large orders going to Canada, which is the case at this point. We have several millions of dollars of diamonds being delivered to a particular client in Canada, and we wanted to make certain that our client didn't get hurt on the currency as much. So we hedged the Canadian American dollar, made some money on that, and was able to pass the savings on to our clients. So for the next 2 weeks, and 2 weeks only, those of our Canadian clients that are interested in buying diamonds, we will sell those diamonds to you in Canadian funds at the going rate of the American U.S. dollar. So that means you're immediately going to be in 30% profit immediately as soon as you buy one of these diamonds. And you're going to pick up another 10 or 15% over the next year just on the change in the currency. And then on top of that, the price of the diamond going up. So again, we want to make certain, and again, we want to make certain that our Canadian clients get through these extremely difficult times. You got the oil markets in Canada plummeting. Unemployment in Canada is growing. The real estate market is suspect. Our clients are hurting out there. That's why we invited them to invest with us on a rough diamond program that has bailed out most of our clients. A lot of my clients are retired, but imagine making 24% a year. A client that invested $100,000 with us 2 years ago made $24,000 a year U.S. $24,000 on $100,000. It's a 2-year program. They made $48,000 return plus a return of their initial capital and can do it again. This is the type of programs that we're bringing to our Canadian clients. On top of that, for the next 2 weeks, because that's how long I have this hedge on for, you're going to be able to buy diamonds. Argyle pinks, yellow flawlesses, this magnificent orange diamond that we feature this week, and we will sell these diamonds to you in Canadian dollars. That means the second that you own this diamond, you are going to be up 30% just on the currency alone, let alone what that diamond is going to increase over the next 5 to 10 years. So again, these are the type of things that we bring to our clients. Again, Most investments are one-dimensional. You're going to buy a stock, you're going to buy a commodity, you're going to buy a bond. We're creative. We bring programs to you that are conservative but still give you an opportunity to make an awful lot of money. And let's face it, the people in China right now, we're getting so many calls from China from people that are losing their money and want a stable investment. You know, it isn't always about capital appreciation. It isn't always about just making money. At times it's about keeping your money. It's called capital preservation. You don't want to lose your money right now. You want to keep as much money because there will be opportunities coming up as currencies and stocks and other assets fall. We're going to be the ones that are going to be able to jump into the market and buy these assets back. So again, because of the hedge that we put on the Canadian-American dollar, for the next 2 weeks, our Canadian clients only are going to be able to purchase diamonds in Canadian dollars, which will put you up 30% the second you make that transaction. And for those that are looking to make serious money in our rough diamond program, the window of opportunity is closing. We've pretty well raised all the money that we needed to raise. There's very little money left to raise. So at this point here, we probably have about another 2 weeks, and that's it. You will not be able to invest in our private investment any longer. It'll be just totally restricted to people that have made that move over the last 2 years. So again, Randy, no matter what's happening in China or Greece or Venezuela or Iran or Russia or all these countries where people are losing all of their money and barely getting by and living on nothing, we've got opportunities here. Every day that we wake up, we can't wait to start work because there's new opportunities. Because we're on Google and we're extremely well known, we get calls and emails and leads from all over the world on our diamonds. And we're getting an influx of calls from China, which tells me that people in China are very concerned about what's happening with their overall economy and the marketplace. The same thing is going to happen all over the world. We need to be prepared for when it really hits North America. And again, it's happened right in front of our eyes. Us Canadians, and I'm Canadian living in the United States, we've seen it happen. In the last 2 years, our Canadian dollar has gone from being at par with the U.S. or even stronger to actually being down 30 and soon 40 to 45%. That's going to hurt you tremendously. If you don't want that to happen, contact me. I'll sit down with you and explain to you what you can do in your business and in your investments to get through these difficult times and get set up to make a fortune in these markets.
You can speak personally and privately with Harold. His telephone number, toll-free, 1-800-432-1022. 1-800-432-1022. His website, rarecoloreddiamonds.com. Our featured diamond of the week is a .29 carat paracut fancy orange diamond. This really is the rarest of the rare, a museum piece. And I was able to go back and find that story we had from the beginning of 2014, about a year ago. There was a 14.82 carat orange diamond that sold for a record $35.5 million, $36 million. As Harold was saying, that was $2.4 million per carat, and that set a world record price per carat for any colored diamond sold at auction. Another interesting note, the orange color is the result of the presence of nitrogen during the diamond's creation. Obviously, finding these diamonds, it's very, very difficult. White diamonds, that's a tough business too. No new mines. Then on top of it, when it comes to the rarest of the rare, and that is rare colored diamonds, it's even more difficult. So these are like Picassos and Rembrandts. They're museum pieces, art pieces. And we have something you could add to your portfolio or even start a portfolio with, and that is a .29 carat paracut fancy orange diamond. See it at rarecoloreddiamonds.com. There's video there, featured diamond of the week. And we also have info in our free weekly newsletter. You can get our free weekly newsletter from Harold. Connect with him, 1-800-432-1022, or go to rarecoloreddiamonds.com. Top reasons to invest in fancy colored diamonds, rare colored diamonds. Their value and rarity is recognized globally and can be sold in any currency. It's the easiest and safest and most discreet way to transport wealth, portable wealth, real estate in your pocket, as Harold has educated us for the last 10 years. In fact, It was 10 years ago that Harold wrote his famous article, started his website, rarecoloreddiamonds.com, the famous article, Naturally Fancy Colored Diamonds, the Best Kept Secret. Harold told us about that 10 years ago this month. The other aspect about diamonds, they're not directly tied to a global market. You can see the stock markets plunging, but really, diamonds, they're an asset class of their own. Less than 1% of all colored diamonds mined are considered investment grade. Colored diamonds are the most concentrated form of wealth in the world. No new mines producing naturally fancy colored diamonds have been discovered. Colored diamond mines are shutting down without replacements, as we've spoken about. 90 to 95% of the world's pinks going away when the Argyle mine in Western Australia shuts down in the next 5 years. A hard asset that diversifies your portfolio securely and is not affected by volatile market movements. And based on a diminishing world supply, experts predict dramatic price increases in the near and long term. Naturally fancy colored diamonds have never decreased in price in 30 years. But Harold, I'm just going to grab that report right now. It was 10 years ago. It's hard to believe. In fact, we're doing this show on August the 6th. You wrote a report August the 9th. I have it time-stamped here. I printed it off, 10:36 a.m. Naturally fancy colored diamonds, the best kept secret. You revealed the secret to us 10 years ago, and congratulations. Our radio listeners and clients have done exceptionally well investing in diamonds over the last 10 years through rarecoloreddiamonds.com.
Well, very, very ecstatic that this has worked out as well as it did, and by far the best is yet to come. We're building and building and building the business, building awareness, doing seminars. By the way, anybody who wants a seminar, a virtual seminar, we'll do that for you. You can go right on our website, sign up for it, and we'll do a seminar for you from the comfort of your own home, because all of our businesses, our auction business and our seminars and webinars and everything are all virtual. Means that you can be anywhere in the world and you can watch our auctions or participate in our seminars, whatever, from the comfort of your own home, from your iPhone, or from your iPad. So, again, we're totally into the century. This is one of the most exciting investments you can make. Now, it's a long-term investment. You don't buy diamonds and sell them in a couple of years. It's a waste of time. The longer you hold them, the more they go up. We bought Argyle pink diamonds because the mine is going to close in 2020. That's only 5 years from now. So basically, over the next 5 years, we anticipate that the price of pink diamonds will skyrocket. They'll go up more than almost any investment you have ever seen. And it's strictly because this mine in Australia produces 95% of the pink diamonds in the world. You want to own one of these diamonds. If you put money away for retirement, if you're in RRSPs or mutual funds or whatever, you will never, ever, ever make the money that you will make on a long-term investment in diamonds. I put diamonds away for my grandchildren for the long term, for 20, 30 years. My grandchildren are very young. By the time they get 28, 30 years old, I want them to have something substantial, not a stock that's going to be worth nothing. The fact is stocks can go to nothing. We've seen it happen on many, many occasions. But gold will never go to zero, and diamonds will never go to zero. But stocks can definitely go to zero. So, again, this is a different world. You've got to be much more conservative, and we're very conservative here. We've never told you to leverage. We've never told you to finance your metals. We've never told you to do anything like that. We've always told you or suggested to you to be conservative, to own it outright, never to leverage. We're owning gold and diamonds as a long-term hedge against all the things that are happening all over the world to everybody else and will eventually happen to us. Now, again, we need to be sharp about this because we want to be proactive. We want to do it before, not after. It's like an insurance policy. You don't take out an insurance policy after your house is already burnt down. So again, if you're seeing the risk, if you're having problems making a decision as to which route to go, ask for a second opinion. It would be my pleasure to talk with you as much time as you need to give you information. I'm not selling you anything. If you happen to want to invest in some of the products that we're recommending, I'd very strongly recommend it, but I'm not going to talk to you based on selling you something. I'm going to talk to you about based on your own situation and how you can improve your situation and eliminate some of the risks that you're in and get prepared for what's coming our way. We're going to make an awful lot of money. It's coming very, very soon. We're going to make it in gold. The thing is about gold and silver, which is really crazy. These are the only commodities in the world that seem to be adverse to market conditions and to supply and demand and all the, things that make sense about the economy. For example, if there's an actual shortage of silver, which there is, let's face it, silver's down to $14.50. A lot of the mines have closed down. They're losing money on every ounce of silver that they produce. The Canadian and American governments have come out and said that they cannot get enough silver to mint their very profitable silver coin program from the Canadian and the American mint. So explain this. How in the world is it possible for there to be a shortage of silver, which is not only a monetary metal, but is also used in computers, in photography, in medical, in solar, in almost everything out there, silver is used. And the fact is that there's hardly any silver. The Canadian and American government have admitted they can't get enough silver, and the price is going down. You realize that is an impossibility in any other situation except for gold and silver. It's when the government wants something to happen and it's going to adversely affect them in a positive or a negative way that they're going to step in and they're going to make it happen. But the situation is that these situations only last for a certain period of time, because commodity trends are long-term trends, and you can alter them for a short period of time, but the bottom line is they are going to come back into your life again. Just like I've said, I anticipate that the price of gold should hold 1,000, but if it did break 1,000 because the U.S. dollar goes up more than we anticipate, if that did happen, it could go back to the trend line of 1980 when gold hit 850. How crazy is that? That we have to go all the way back to 1980 to find a definitive support level for gold. That's why you need to understand what's happening in these markets if you're ever going to make the type of money that you want to make in the markets. So again, continue listening to the show. Continue to get the newsletter. Both of those are free. We've never charged our listeners or clients for any information whatsoever. If you need to talk to me personally, I'll spend as much time with you as I need. At 7 o'clock this morning, I was speaking to a listener in Calgary that had questions on the Canadian dollar. So again, we're here for you. We want our clients and our listeners to do well, and there's going to be an opportunity to make a tremendous amount of money. We want you on board.
There was an interesting quote this week from Business Insider. There are basically three approaches to saving. You can work more, you can save more, or you can want less. I think the other aspect to it is you can invest, obviously, in a more wise way. And that's what we're offering. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022, 1-800-432-1022. We know that Puerto Rico defaulted on bonds. We have, obviously, the stock market opening up in Greece and shares being plummeted. In fact, you had the stock markets there on the first 3 days. They're really only allowed to go the stock market down 30% per session. And in the first couple of days, it was down well over 50%. There was a bank that the shares were worth 40 cents euro, and a few days later, it was worth 13 cents. So you can get an idea of what's happening. It's bad enough the Greeks are going through what they are, and then on top of it, their wealth is being wiped out in their Greek stock market. Harold, we thank you for another outstanding show. We encourage everyone to connect with you at rarecoloreddiamonds.com or call 1-800-432-1022. People should speak to you about our featured diamond, a .29 carat pear-cut fancy orange diamond. You can see it at rarecoloreddiamonds.com. And thank you, Harold, for your knowledge on this program for another week.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Now more than ever, it's important to speak personally and privately with Harold, and you can do that. Connect with him at rarecoloreddiamonds.com or 1-800-432-1022. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.